All right, so we're talking about these dead money stocks. In all fairness, we're looking at the performance year to date. If you look at some of them over a longer horizon, you do see some gains. KKR is a great example. But when we're looking at dead money stocks, at least from the year to date perspective, how do you view them in a portfolio?
Well, the market rewards earnings momentum that then creates stock momentum. And I think all the names that you listed, after a good run that they've had, they each have some of their own growth issues. I mean, you mentioned Lilly. Lilly is their business, the GLP-1 business, has gotten much more competitive. People are worried about the effectiveness of the pill versus the shot. You mentioned Lockheed. Lockheed, people are questioning what the level of U.S. defense spending will be going forward, and also the greater competition for business that we're seeing out of European military producers. Denmark the other day announced instead of buying Patriot missiles from RTX, they're buying it instead from a European military company. So it's that lack of earnings growth and sustainable momentum that has created, I think, a stuck in the mud situation for the stocks.
All right, so they're stuck in the mud right now, but there are some of these companies that are in a turnaround phase. I'm looking at Nike, clearly in the middle of a turnaround. Right now, is there at least a sense that you might be buying this at a low, in a company that has a great brand, has a great customer base and a lot of customer loyalty over years and new management, and it could turn around? So this is actually an opportunity to get into the stock, even though it's been down dead money so far this year.
I think so. I prefer to find stock ideas on the 52-week low list rather than the 52-week high list, in anticipation of what you said, a growth and turnaround situation with, I think, Nike with the new CEO, a new game plan going forward, I think is a great example of that.
All right, how do you view Apple? Obviously big weighting in the major indexes, a widely held company, and certainly they have very stable revenues with the iPhone. The fact that it hasn't moved higher seems to be largely tied to its AI ambitions or lack of performance when it comes to AI. How do you view a company like that when we just don't know what the next steps are going to be?
And also, I think that Apple's dealing with two things. Number one, a 30 multiple, which is an extraordinarily high valuation for a company that isn't really seeing much top line growth. And the iPhone business, as great as it is, as dominant as it is, it's not the same growth story as it once was. I view iPhones almost like selling TV sets now. The new iteration is better than the prior one, but people are just delaying their upgrade cycle. So I think those are the two challenges, in addition to what you just said, that it sort of missed the tremendous AI tech trade that other companies experienced.